Insane good news for Nio Stock, Nio Stock Analysis and Predictions. What's the good news for Nio Stock? And what do Nio's analysis and predictions say about Nio Stock? And what is the future of Nio Stock? So, welcome back to Stock Market News. We are back with another very interesting video. Today, we are going to talk about Nio Stock Analysis and Predictions. So without any further ado, let's get into the video right away. In the year before the most recent earnings report, Nio sales grew by 122%, which is impressive. But the company is also quickly making more shares, which makes each shareholder's ownership claim smaller over time. Nio isn't the worst company in the world when it comes to dilution. Its number of shares went up a lot in 2019, but then it slowed down. Still, the increase in the number of shares was big enough to be worth mentioning. It grew by 67% CAGR between 2018 and 2022. Nio's revenue is growing faster than its number of shares, but they cancel each other out enough that dilution makes the growth look less impressive. For a long time, that was pretty much where the story ended for me. As a fan of Chinese tech stocks, I did some research on Nio, and I came to the conclusion that it wasn't as financially stable as other Chinese companies. On Thursday, June 9th, Nio stock went down after earnings beat expectations. People were surprised by how much cheaper the stock had gotten because the price had gone down and the company was making more money. Because of these two things, Nio's price-to-sales ratio went down to 5.6, which isn't too high for a company that has grown as much as Nio has. In the most recent quarter, the company's sales went up by 25%, even though there was a big lockdown in China. If the company can avoid lockdowns and other political problems over the next year, it should be able to speed up its revenue growth by a lot. A return to 100% growth would make its sales multiple of 5.6 look like a good deal. This combination of a reasonable price and the chance for growth is appealing. EV is a very competitive market, with Tesla being the most well-known brand and BYD having the biggest market share in China. Right now, Nio can't compete with either of these companies' advantages. It doesn't sell as many cars or has as much name recognition as either, but it has the potential to get better. Before the Q1 lockdowns, Nio's revenue was growing at a rate of 122%. Even with the lockdowns, it still grew by 25%. Even though the growth rate before the lockdown was much higher than Tesla's, Nio still has a much lower sales multiple than Tesla. Nio appears to have a promise as a comparative valuation play. The comparison to BYD isn't very good. BYD's deliveries are growing by 250% year over year, which is much faster than Nio's rate. It's also delivering a lot more cars. In 2021, it sold 593,743 cars. When it came out that BYD was selling batteries to Tesla, this made a lot of noise. That was a big deal because it took away Tesla's big advantage over other electric vehicles, which was making batteries. Nio is not a major company like BYD, but it doesn't compete directly with BYD. BYD sells both cars and commercial vehicles. Nio sells mostly luxury cars, so there is room in the Chinese EV market for both companies. It's not as big as BYD or Tesla, but it's a real company that sells more and more cars each year. As a small cap speculative play, it has potential. If we want to know if Nio is living up to its promise, we need to look at the company's finances. Nio accomplished the following in its most recent quarterly report. Revenue of $1.56 billion, an increase of 24.2%. A decrease of 6.9% brought the gross profit to $228 million. A worsened operating loss of $345 million, up 640% from the previous year. A net loss of $281 million, which is a 295% increase over before. Even though sales went up, they went up less quickly than in previous quarters. It's easy to see why Nio sold off after saying that its losses were getting worse. When a company's losses get bigger, it loses value, assuming that the company was valued correctly before the losses. Also, both the top and bottom lines of Nio's earnings report were better than expected, so it's not clear why the stock fell after earnings. It shows that analysts who follow the stock were not very sure about their estimate of what it was worth before the release. To be honest, Nio's strong top-line performance was impressive on its own. During the last quarter, lockdowns were in place in much of China, and Nio factories were known to be affected by them. Given the problems that were happening at the time, the earnings report was pretty good, but the possibility of future lockdowns is reason enough to be careful. After reviewing Nio's most recent quarterly report, we are now able to proceed to the company's balance sheet. Total assets amount to $13.7 billion, and liabilities $7.8 billion. The amount of equity is $5.3 billion, while the debt is $1.7 billion. $10 billion in current assets, current liabilities $5 billion. Cash in hand equals $2.5 billion. $7.7 billion in cash and short-term investments. Using the data shown above, the following may be deduced. A current ratio is 2, reflecting high liquidity. A cash ratio of 1.54, which, once again, indicates great liquidity. A debt-to-equity ratio of 0.32 indicates that the company is very solvent. The balance sheet for Nio is excellent. It does well on both liquidity and solvency, and it has enough cash to pay off all of its debt. The only thing I would say is that a lot of this was done by selling stock instead of borrowing money. So far, we've seen that Nio's recent earnings were not very good, but that the company has a strong balance sheet. On the money front, there are a lot of mixed signals, but there is a reason to be optimistic here. Assuming that we can avoid truly severe lockdowns in China in the next years, Nio should be able to significantly increase its revenue growth. Before things really pick up in the second half of this year, the second quarter might be a pretty quiet time. Wall Street thinks that Nio will deliver 28,220 cars in the second quarter, which is a slight increase from the first quarter. They think that it can sell 39,290 cars in the third quarter and 61,900 cars in the fourth. If that happens, Nio will be on track to sell 152,179 cars in 2022, which is 66% more than the 91,429 cars it sold in 2021. Notably, Nio started sending out its fourth model, the ET7 Smart Electric Sedan, which is the company's flagship model, in March. But in March, only 163 ET7s were sold. There were 693 sales in April, 1,707 sales in May. It plans to make more models this year. This year, both the ES7 and ET5 will be available, and the company's new factory in Hefei's Nio Park will make the ET5 a midsize electric sedan there. In September, the ET5 should start coming off the production line. It also plans to make new versions of the ES8, ES6, and EC6 SUVs that come with its new digital cockpit technology. Also, pay close attention to the margins. Because of problems in the supply chain of the auto industry, prices have been going up everywhere. In the next few months, the situation in China and supply problems around the world are likely to be the biggest worries, but the markets are hopeful that things will get better in the second half and get the company back on track. Because of this, it could be a good recovery play in the future. But Nio doesn't think it will turn a profit for the first time until 2024. This is because it is putting out new models, expanding into Europe, and spending a lot more on research and development. Because the EV business is so competitive, investors wanted Nio to grow faster. It still has plans for growth, and things look better than ever. I'd even say that the drop in Nio stock price is a great chance for investors to get into the electric vehicle market. Not only that, though, Nio will start making its own battery packs for this mass-market EV in 2024. The most important part of an EV is its battery, and Nio will need to make its own batteries in order to become self-sufficient and mass-produce low-cost electric vehicles. Nio also said on Friday that it wants to build an industrial park where parts for electric vehicles will be made, so that its production base and supply chain for parts can be closer together. So, I think that's all about this video. I hope you like the information given in the video, and if you have anything on your mind, feel free to comment below. Make sure you don't forget to like, share, and subscribe to get more videos like this one. And also hit that bell icon so you get the notification of the latest updates on our channel. And thanks for watching!